Hey guys, welcome to this episode of Stocks to Watch. In this episode, I'll be talking about two indices or two Indian indices, Nifty and Bank Nifty. Some stocks that you guys can probably keep on your radar and you can consult your financial advisor before initiating a trade, and DXY as well to understand what can happen globally. Now, let's start the video and let's talk about DXY first. The chart that I have in front of me is DXY's one-day chart, and I'll hop you guys over to the weekly chart and then start discussing about things. So the weekly chart of DXY looks completely bearish in my opinion, and my bias is going to be bearish. Now you guys can clearly see this red candle being drawn, and was drawn last week. If you guys are not there over my Telegram, then you guys can probably join my Telegram, because that's where I usually post my, or my Instagram as well. These are the places where I usually post my weekly commentary, my economic commentary, the stocks to watch, the cryptos to watch, and some forex pairs is, they are setting up hot. There are three factors that you guys need to keep in mind, and before initiating trades or doing anything, you guys need to understand from an Indian markets perspective, or if you are an only Indian market trader, we've got the budget coming up on 23rd of July. We've got the CPI that came on Friday, and the CPI was posted a little above the estimates. The estimate was somewhere around 4.8 and it came out at 5.1. The third one is going to be indices are looking overstretched. Now, Bank Nifty, Nifty both are looking overstretched. Nifty on a daily time frame still looks bullish. I will, hop you guys over to that and show you. But Bank Nifty completely looks bearish in my opinion. When I talk about dollar index, US indices are still looking overstretched, but at the same time they are making all-time highs every day or the other. So you see how the global cues firstly are. US CPI came way below the estimates, or it was just a 1.1% gap. First, second, when I talk about DXY, you guys can clearly see that this was the point of interest for me. The first reaction came from this zone, second reaction from the same zone, and the third reaction from again the same zone. So basically what I want to see as of now is this is going to be a weekly print. And when you want to anticipate moves, I think every day just get a diary and try to understand what's going to be the next candle print when doesn't matter whether we talk about the daily or the weekly, but yeah, that's what you guys can probably do and analyze whether you guys are able to understand the next daily print or a weekly print or not. Every time it's not going to be possible, but let's say even if we are considering 10 out of 7 times or 7 out of 10 times, it's completely fine. So that's about it. But from a dollar index perspective, two bearish weekly prints, we can probably expect something of this sort. So let's say we are down to this range. Okay, now this happens to be an important range. We can probably see a small reaction up to this zone of 104.8 and then back down again. So what I'm basically trying to say is, if I want to show you guys my path, this is what I'm expecting, and post that we start falling back again. Okay, this is going to be my path, and I'm only talking about a one side path. I don't think that we are going to go up or clear the highs or sweep the highs and then fall down. I don't think that's something that's going to happen. From a fair value gap perspective too, if you guys can clearly see there's a huge fair value gap here. I think there's going to be a run above or maybe a tap above this or below this, and we start falling back again. So when we start falling back again for DXY, it's quite obvious that indices are going to jump. I'm talking about US indices, okay? And the global scenario or the global cues are going to be positive. When the global cues are going to be positive, obviously Indian markets will be fueling up too, and it's not going to fall as the way the negative effect or a cascading effect that every market is falling and now Indian market starts falling too. That's not going to be the effect. Why? Because the global cues are going to be bullish. But a pre-budget move can be seen where we try to stay inside a sluggish range and we fall a little too. That's something that we can expect out of this market. Now let's hop on to Bank Nifty's one-day chart. And you guys can clearly see that Bank Nifty got rejected out of this zone. This was the buy side liquidity for Bank Nifty. A lot of breakout traders got trapped here, thought the next day when the market is going to open, they are going to open up green, their longs are going to open up green, but institutions completely started shorting this. Their stop losses were here. This triggered a further drop again when their buy orders got converted into a sell order, and that triggered more and more drop. So yeah, that was from an order perspective. Now from a price perspective, when I talk about Bank Nifty on a 4-hour time perspective, you guys can clearly see that the path that was drawn by me got completely followed, and this was again posted on Telegram. So you guys want to join Telegram, it's completely free, you guys can do that. Now what I'm trying to see and trying to observe is in Bank Nifty, the only level that I'm trying, or the point of interest is going to be 52,600 to 52,800. These two are the zones where I want to see. Let's say if we see a flip above this. By flip, what I basically mean is, let's say if we see a flip above this, I want to see this consolidating here, and then we can probably see a move towards the upside. But after looking at the current candle or a 4-hour candle print, I think we can run below, take out some liquidity, and then start moving up, or maybe pierce this. Piercing this has less chances as of now. Only if we do, then we might have to or I might have to reevaluate the charts. But from the current perspective, yeah, I will be staying bullish until and unless the trend or the market structure gets completely shifted. But you guys need to stay a little cautious when you are looking for longs. Why? Because until and unless this zone has been taken out completely from a down perspective, stop your longs and just get out of everything. But if you see this getting respected, and if we see a reaction from this zone, you guys can probably stay with your longs or your holdings, or you can even consult your financial advisor before adding or removing anything. Okay, don't do anything on my saying, since I have already said that I'm not a SEBI registered advisor and I'm not the right person to guide you guys. From a daily perspective, when we hop on to Nifty, the only level that I am currently looking at is going to be 24,593, and I want to see a flip above this, or a candle closing. Let's say a weekly candle closing of this. A daily candle closing can easily be manipulated. You see a candle closing today or tomorrow above 24, or let's say even 25,000. The second day we can fall by 1,000 pips or so. So you guys need to be prepared accordingly. The current trend looks completely overstretched, and I want to see a run above, or let's say a tap below a mitigation of this zone, and then that's where I want to see or place my longs, because I don't think this is a good or a sweet spot to place longs, but especially index future longs. And I usually do not, take a lot of futures positions in indexes too. So in my opinion, I think it's better to wait out and be an observer and sit at the sidelines instead of, infusing your money and losing out for no reason. Because when you don't see a setup forming, there's no point of initiating forceful trades. I think this saves up a lot of money and a lot of charges too, but people usually want to trade every day. If they have free cash, they want to trade every day. But it's not necessary that you need to trade every day, even if you have a crore or 2 crores in your cash account. So that's about Nifty. The levels that I'll be watching out is going to be 24,593 to 24,600. And from a 1 hour perspective, I want to see, like I said, a flip above this zone, and I want to see this zone getting taken out. If this price zone is not getting taken out, I won't be doing anything, and I'll wait Nifty to come back down to, let's say, by 400 or 300 pips more. Now let's talk about the stocks that I've scouted. These are some stocks that I've scouted. So the first one happens to be PI Industries, and PI Industries, why have I scouted this? The reason behind this is a very good supply contraction. Why? Because it's trading near the supply and trying to accumulate near the supply. The orders are being built, and this is going to be the perfect setup once we see a breakout in this. Now it's trading near the supply. I want to see a small retracement back to this zone of 3,700 to 3,800, and I might think about longing this only at this zone. If this is not getting triggered, when I see prices moving up to 4,000 or above and staying above that on a 1 hour time frame, then only I'll reevaluate my entries. Or else, as of now, I'll just be looking to do one thing: sit and observe and wait for my levels to get triggered. If it's not triggering my level and if it's still moving up, nothing else to lose, and I have nothing else to realize as well. Let it move up. That's how I usually play out. Godrej Agrovet, another one that's trading near the all-time highs. I want this high to be taken out. I'll just refine my entry and show you guys what I'm currently expecting. I am expecting this wick getting taken out, retracement back to this to fill this fair value or fair value gap, let's say to this zone, or maybe if I stretch it a little to this zone of 806. And once we do that, that's where I'll be placing my longs if I get an opportunity to. And the risk over here is going to be 3.5%, and the target or the chase that I currently have pasted is going to be 11%. So why I'm trading Godrej Agrovet is trading near the highs, again a supply contraction. The price might start compressing very soon, And once that starts to compress, that's where you guys are going to see a squeeze. So yeah, the base is getting built good. Let's say if we see this base build up, okay, let's say if we see this base build up and we start consolidating here, it's going to be a good entry. Why? Because you can see an expansion towards 900 very soon. So yeah, this is all about Godrej Agrovet. Now let's hop on to the second or the third scout for the week, and it's GSPL. I personally have an entry in this, so there's going to be a disclaimer, and you guys do not have to enter this without consulting your financial advisor. So make sure of that. Why am I considering this? This is not trading near the supply. The reason is you guys can clearly see that it made a recent high or a swing high at 407, made a very big gap down, and this GSPL did it because it something or the other happened in their factory, and this is what led to this. And even they missed out a huge on their margins as well. So their margins were missed out, and yeah, you can clearly see their margins were missed out, and that also made or acted as a catalyst where we saw a huge gap down. This whole void needs to be filled because this is something that is inefficient, and it's like taking the air out of a vacuum. So it's going to get filled very soon, but you cannot actually time or say when it's going to get filled. After looking at the structure, what I basically see is, from an entry perspective, I am waiting for, or rather I've already entered and I'm waiting for prices to come down to 310, 310 or 312. This is going to be the zone that's going to be important for me. And let's say if I want to cut down my size, the only invalidation zone that I have is a closing or a daily closing beneath 306. So yeah, that's about GSPL. I am still chasing, or the chase is going to be around 17%. You can even shave off your whole position when you are risking 2% and when you are getting 4%. So 1:2 is completely fine in my perspective from a risk to reward uh, application. Yes, and from an entry perspective, like I've already said, 317 to 315 looks good. Depends on where the market is going to open for GSPL tomorrow. And if you see a gap up, if you are already holding GSPL, then keep holding until you see 374 or 380 getting filled. GSFC is nothing but a compressional move. Now this whole compression is nothing but made a recent high over here, came back to this zone, and we saw same reaction from the same zone again, and this was impulsive. Now what it's trying to do is, on a on a 1 hour time frame, what you guys will see is it's trying to simply make equal highs from a big perspective. From the body perspective, it's trying to make equal highs, and it's trying to compress. Now this compression will lead to nothing but a compression here, a compression here, a compression here, and that's where we see that expansionary move coming. This is what I personally expect. Now if you guys want to enter, I think in my opinion 250 to 254 is going to be a good zone. I have an entry over here too, so kindly consult your advisor before taking an entry in this. And at the same time, the risk over here is going to be quite less, and not going to be risking more than, let's say, 3%, and the reward is easily, I think, 1:3. So if we are risking 3%, you can expect 9% out of GSFC. And once you see this getting taken out, we can easily expect 300 zones coming soon. NYKAA, the last stock that I've scouted. Now NYKAA is not going to be something that I'm looking to initiate a position in, but this is something that I'll be observing too, because on the left side I have a huge supply side imbalance, and on the right side it's trying to consolidate and make higher highs, or let's say over here it's making equal highs too. So I'm waiting for this place to play out, small retracement, more bigger base, and the more the base is going to get matured, the more confident I'll get in taking an entry in NYKAA. But as of now, you guys can probably keep this in your radar, and after this, let's see how this plays out, and I'll re-evaluate the entry, since I'll be posting stocks to watch as much as I can. So I'll try to post it every alternative day or every day, and this will help you guys in understanding what's up with the market and what can we expect, or what are the how-abouts of the market. I'll see you guys in the next video. This is all about today's video. Make sure that you're trying to shape the risk of every position, and on every position you take, even if it's giving you 1% or 2%, try to take the risk off and bring your stop loss at break even, so that even if you exit, you're exiting at break even. A lot of people have this habit of, let's say if I'm risking 2%, no matter what, even if I'm making 4%, my target is 6%, I'll either let my stop loss get triggered, or I'll let my 6% get, or my take profit get triggered. That's actually not a right psychology, that or a mindset that a lot of people have. So try working on that if you are someone who's doing the same. And yeah, I'll see you guys in the next video. You guys can probably let me know in the comments if you have a question.